Risk management for a nonprofit starts with good governance, effective management, and appropriate policies for employment practices, conflicts of interest, and financial management, among others. In today's conversation, I'd like to focus on the backstop to good risk management. That is, appropriate insurance coverage, because mistakes happen. Yeah, I said that right. Mistakes happen. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. Welcome to EO Radio Show. In this episode, I'm delighted to bring you part one of a conversation with Melissa Dalske, Chief Experience Officer at Nonprofits Insurance Alliance. The Alliance is an organization relied on by more than 24,000 nonprofit organizations in 32 states and the District of Columbia. These nonprofits include animal rescues, children's programs, group homes, senior organizations, art programs, food banks, community groups, foster family agencies, and many others. These organizations are essential to the health of the communities they serve. Melissa is here to talk about insurance basics and best practices so that insurance headaches don't keep nonprofit leaders awake at night. In part two, we'll take a deeper dive into special event coverage and best practices in managing claims. Thanks for joining me today, Melissa. I'm so glad you're here.
Thank you for having me. I'm happy to be here.
I gave a little bit of a summary about your background in insurance and nonprofits. Can you tell us more about how you came to be in such an interesting position in NIAC?
Sure. Well, actually, I kind of stumbled into this career. I was a music major in college, and I had aspirations of being a musician, but I needed a day job to pay the bills. So that's sort of how I found my way into insurance. And it just sort of snowballed from there. It's a field that's interesting. It can be intricate. It can also be very overwhelming. So I've really worked these 20 years to try to make it an understandable task for most business owners, especially small business owners, new business owners. And I've had some really great mentors along the way that have taught me a lot about insurance and risk management. And it was just in the past 6 years that as a broker, I really began focusing on the nonprofit community. And I just loved it. I had a sense of purpose. I had a feeling that I was in some ways indirectly giving back to their communities by helping them launch their nonprofits. It's just a magical process to just watch their doors open and see these great organizations thrive. As a broker, I actually worked with Nonprofits Insurance Alliance. And when I kind of neared that 20-year mark, I thought to myself, I like insurance. I like nonprofits. What else can I do with this? When I joined the Nonprofits Insurance Alliance team, and we're a 501c3 nonprofit ourselves, and really we're here to advocate for all nonprofits about insurance, risk management, taking control of that insurance process that is so daunting, and educating their brokers on how nonprofits operate and how it's different than the rest of the insurance industry. So that's how I ended up here. And it's been a great experience so far. It's just a fantastic organization.
Oh, you're so perfect for this audience. I'm really excited to get into the meat of this because I do find with my startup nonprofit clients, they have to start with getting some insurance almost from the get-go to attract their board members. But many of them are activists or people from other business areas, and just it's daunting.
Yeah.
So let's start by talking about the tools available and best practices for a new nonprofit that is on its first search for insurance so they can start operations. They typically have limited funds available for purposes other than their mission, their startup activities, and the leaders have limited time to throw at understanding insurance products. So how does the new organization start thinking about getting the right insurance?
What I would say is finding a strong insurance broker that understands nonprofits and understands startup nonprofits is always a great place to start. But if you're not even at that point yet, what I would say is try not to be overwhelmed by the number of insurance products out there. There's a lot, and every nonprofit is so different. We work with animal rescues. We work with low-income housing. There's so many different nuances to them, and you can kind of get sucked into that. I don't have enough insurance. Where do I go? The first two policies I would approach if I was a nonprofit opening my doors for the first time would be general liability and directors and officers liability. To start, in speaking about general liability, if you are signing a lease, if you are signing a contract, you're working with your local municipality and they're asking for that certificate of insurance, that general liability policy 9 times out of 10 is exactly what they're asking you to provide. What do you get with that policy? It is bodily injury or property damage coverage. And that is a very broad idea. Really what that is protecting you from the day-to-day pitfalls of leasing a property or having a gala. Someone slips and falls on their way into your organization. It provides coverage for that. You're leasing out space for a gala to raise funds for your nonprofit. People get carried away sometimes when you have a gala. Or,
stuff happens.
Yeah, whatever that
right.
special event may be. It's really to protect the day-to-day operations so that if someone does have an accident or, heaven forbid, you damage someone's property that you're leasing, it's there as a security blanket so that those startup funds aren't spent trying to fight a lawsuit in court because someone didn't shovel the driveway when there was a little bit of snow out front. So really that to me is always a great place to start. And then hand in hand with that would be directors and officers liability. A lot of times from speaking with new startup nonprofits, there's a misnomer, the difference between the two. We'll have a nonprofit call and say, I just need directors and officers for my board. It'll cover all those things, those slip and falls. Really, it doesn't. It's really designed to cover defense and settlement costs for mismanaging funds or mismanaging operations day to day in your organization. It's two different things. And then when you stack employees into that mix and you are hiring and firing and heaven forbid you need layoffs or there's harassment situation in the workplace, that's where that directors and officers and expanding that to employment practices liability really comes into play. Those to me are the meat of what every nonprofit should be looking at. There are policies out there that have lower minimum premiums. For example, with Nonprofits Insurance Alliance, we work with a lot of startup nonprofits because we know that you're trying to just get out the door and get started. We have anywhere from $600 for a policy, maybe up to $1,500, depending on what they're doing, but we try to keep it manageable. And there's other markets out there as well. So in my opinion, that's the best place to start. We could go down a rabbit hole beyond that, but that really to me is a good stepping stone. And then, from there, you build it out. You build the building blocks of your program.
So the policies have exclusions. A policy doesn't cover everything. And I guess another typical area, if a nonprofit is acquiring a building, then you get into all the regular property coverages. Those are kind of the same for a nonprofit as for anybody else, right?
Yes.
If you're going to buy a building?
Absolutely. There are a lot of overlapping coverages that a nonprofit would face just like any other business. Yes, the property, for example, if you're leasing a building or you own it, we would suggest purchasing property coverage just for your assets. You can extend those policies to cover a leased building in case it burns down and your lease requires you to cover and rebuild that building. That type of coverage can be added into. In that same vein, auto. If you have any volunteers or staff that is driving for you, whether daily as part of their position or just infrequently running to the bank or to the grocery store to get more creamer for the lunchroom, you have an auto exposure because they're operating their vehicle or perhaps the organization's vehicle during business hours. And that's a business auto loss if and when something happens. So there are some overlap. Absolutely.
And before getting into some of the other nuts and bolts, can you say just a little bit about umbrella coverage? I think that's confusing to a lot of people. Does the new nonprofit even need to think about that? At what point does a nonprofit need to worry about additional coverage on top of their menu of policies that they've arranged for?
What I would say, it's a tough question to answer. With a newer nonprofit that's trying to get off the ground but protect themselves with insurance coverage, an umbrella isn't necessary if your budget doesn't allow for it. What I would suggest is purchasing enough coverage that you're comfortable with paying those premiums and you feel protected, but you're not overextended. As the operations grow and you have more funds to put towards insurance, it may be a good time then to look for umbrella coverage. I'm always a proponent of maybe $1 million umbrella if your budget allows for it. And as your operations expand, your chances of a suit grow with that. So as your risk grows, your opportunity for claims grows, unfortunately. But for a startup, I would say if you have the budget for a small umbrella limit, great. If not, I would just start with those building blocks, building out that general liability, the directors and officers, cyber liability. There's,
good one.
Sexual abuse coverage. I mean, there's so many pieces of that framework that you can build to cover you for that first $1 million that the second $1 million you would purchase in an umbrella is really secondary to that. Again, I know I sound like a broken record. If you have a broker that really understands what you are doing, sit down with them and talk to them about those things. There are these ancillary lines. If you're dealing with any sort of vulnerable population, children, the elderly, developmentally disabled, do you have sexual abuse coverage? Because you can purchase an umbrella. There may not be any coverage under your general liability for those things. So I'm always a proponent of building a strong base. We've also found the hard way unfortunately, for some of our nonprofits, when you buy too much umbrella limits, you're putting a target on your back. We just see these exorbitant lawsuits, and those policy limits are really the target that the lawyers are going for. And unfortunately, the victim is the nonprofit. The only people making money off of those settlements are the lawyers in these instances. So we really try to keep it within reason. We're trying to protect the nonprofit without giving them undue reasoning for a huge settlement.
Right. So that's a great segue to how much insurance do I need and what should the deductible be? We all know that from our personal policies that the monthly price for our auto policy really depends on where you set that deductible. Your initial answer is going to be, it depends on the nonprofit. But how does the nonprofit start to think about, I guess I know in a lot of contract situations, there's standard minimums that counterparties want to see. Maybe that's where you start. But what are your thoughts on coverage limits and deductibles?
So I agree with you. I think limits, if you're looking at how much limit should I purchase, a lot of that may be driven by your contracts. If you have a contract that requires $5 million in liability limits to operate, that's the starting point. And unfortunately, a lot of times there's not always wiggle room in those requirements in the contract. So if you have a contractual obligation, that's always a great place to start. If you don't, again, I would ask for pricing. I'm interested in purchasing insurance. I'm not sure how much this is going to cost me, but could I have a quote based on $1 million, $2 million, and see what those numbers look like? If you can afford more, great. If you're stretched, start where you feel comfortable starting and just know that next year their pricing will probably be in that same ballpark. It may be something to consider with the board the following year, get you to a more comfortable level where you don't feel like the organization is strained. The one thing that I always remind nonprofits and any person I'm helping with insurance is what you are liable for in a court of law, it doesn't stop at that number where you're covered. If you've got $1 million in coverage, but the suit ends up costing 1.5, that $500,000 is still the responsibility of the organization. So a lot of it too is taking a look at what you're doing day to day and sort of analyzing where's our biggest potential for a lawsuit. Are we doing any? And a lot of organizations may not think like that. I think us insurance people, we're probably Dr. Dismal here, but I think a lot of that is based upon what you're doing. Are you working with those vulnerable populations? Okay, what's our worst case scenario? It's a tough thing to swallow, but it's something that every organization should be thinking about. And from there, get to a number that you feel comfortable with from that limits perspective for coverage. Deductibles is a bit of a different story. It's really what the organization feels comfortable paying out. And again, I would suggest that you talk to your broker about that as well. My deductible is $500. What if I made it $1,000? Will I save any premium? And does that cost savings outweigh the additional deductible, because a lot of times if the cost savings on the deductible side doesn't make sense, and okay, I might have a few fender benders this year. I need to keep my auto deductible at $500. I know we're going to run into these problems. It doesn't necessarily make sense to increase it to $1,000 if you're only saving a few bucks. So I would suggest seeing how much you can tolerate paying up front and ask if there's a cost savings. If there is, go for it. If there isn't, I wouldn't suggest it.
So that's a good segue to another point that I wanted to make, and that is, are there any low cost or easy to implement measures that can substantially reduce the premiums when the insurance provider looks at covering your organization? How much are they really looking at what the new nonprofit is actually doing in terms of best practices or staff management? Does that even come into play at the lower end startup nonprofit?
It does. I don't want to say it doesn't. It really depends. It's the type of organization. I think if you show that you have some best practices, you are going to find that you have an easier time obtaining a quote. Insurance companies like to see that. They want to see what you're doing to mitigate against those claims. It makes them feel better about taking on the risk. And some nonprofits are doing very difficult business in their communities. So if you are a adoption and foster care organization and you can show that you've got a standard operating procedure that allows employees to report incidents, that there's training done with those foster families, that always will help when you're working with an insurance company. Just having clearly documented policies just for any organization, I really feel like that is a great place to start. It doesn't cost a lot of money it's some time, but it's not necessarily money to get them started and to show the insurance community that they're serious about mitigating claims and managing things themselves. And that could be just standard operating procedures. It could be that confidential reporting for incidents, documenting employee and volunteer information, keeping a database, even if it's just a file on someone's laptop that regularly we're checking background checks. We're checking motor vehicle reports to make sure that person's still okay to drive for us. Just those little things that's really, to me, the best place to start is documentation and having clear policies. So if and when something goes wrong, you can go back to those policies, not just with your insurance carrier, but just in general. And okay, where did we go wrong? Sometimes the organization doesn't go wrong at all. It could be staff. It could be just bad luck. But if you've got the right building blocks in place, you're showing the insurance community and you're building it for yourselves and showing that you are doing whatever you can and you're within your own power to prevent these things from happening.
That reminds me of another thing, in that we've been focusing mostly in the last few minutes about the new organization, but a mindset of building a relationship with maybe not so much with the insurance company, but with the broker, to give the broker a better story to tell as the organization goes on in time, because, everybody's going to have a few claims. But if you're looking out 5-10 years from now, how helpful is it to continually improve that background of good practices and to be able to show the broker and the insurance companies that you've improved your risk management over time, and so next year's increase won't be as big or something like that? Do the brokers actually look at this, or is it just a very formulaic, nobody really pays attention to your nonprofit's actual attempts at risk management?
I think everyone should be looking at that. If one of your listeners finds themselves in a situation where they feel like they're doing the right things, but it's not being relayed to the right people or valued by their insurance company, that to me would be a sign that it may be time to look around a bit, because there is a lot of value in not only creating those building blocks of having a strong process within your organization, but continually building upon it. Every time you have a claim, triage what happened. And like we said, sometimes it doesn't happen for the fault of a staff member, or it's just bad luck. Other times there could be something that when you go back and look, we should have trained a little bit more on that piece, or we should have given them more resources up front. And then you just adjust your process and allow it to grow with your organization. An insurance company is looking at that. They want to see that you're evolving. If you're stagnant and just not growing and not changing, you're probably just going to see the same things over and over again. But most of those organizations that are looking to expand their footprint and grow within the community, they're going to encounter these claims. They're going to encounter these claims, and they're going to look at what happened and how do we fix it the next time. I think that a carrier would value that. Absolutely.
Yeah. And as you grow, as you think about it, one would hope you'll need more insurance going forward, right?
Absolutely.
Not less. If you're going to have multiple locations, a bigger employee base. And so these best practices and risk management and internal policies and activities can be useful. I'm putting words in your mouth. I'm hoping they can be useful in future years' applications. So I think this is probably a good segue to the application process itself.
Yes.
I've seen some applications where it's like page after page of really detailed questions, and some of them honestly don't make sense to my organization. How do I answer them? Can you talk a little bit about that first application and what to expect, and then how to think about marketing your organization to insurance companies to try to get the best policy and the best premiums?
Yes. In the nonprofit insurance space, we have notoriously the longest and worst applications. I don't envy anyone that has to sit down and fill them out. And the reason for it is because there are so many different types of nonprofits out there. A lot of the insurance companies are, we're just going to try to capture it all. Here's 14 pages that may or may not apply to you. Best of luck. That application, it is overwhelming. I would say that as you're filling that thing out, because it is a project, you're going to want to put something on Netflix to keep you from losing your mind in that application. But I think the best place to start would be to skip those sections that you think may not apply to you. Really, this is a holistic view. There are going to be certain pieces that just don't make sense. No, we don't have a pool. No, I don't have residential housing. Sometimes they'll allow you to just click an NA box at the top and just move past that. Really focus on those sections that do apply to you. Underwriters look at that application for a few reasons. One, they want to see that you have the right processes in place. Life safety processes are in place so that they feel comfortable moving forward and offering a quote. They're also trying to pinpoint different pieces of information to determine how much premium is needed to sufficiently insure your nonprofit, as well as balance the rest of their nonprofit book of business. Unfortunately, when you look at if I was working with a contractor, it's very easy. They have X amount of sales, X amount of payroll, and if they subcontract, great. We have those three numbers and off we go, we get a quote. With a nonprofit, there's a lot going on. Is there a professional exposure? And by professional exposure, it's failure to render a service to one of the nonprofit's clients. And that really is a broad bucket that those professionals can fall into. You may have caseworkers, you may have counselors. They'll typically ask you for the number of those on staff, and that's because that goes into a pricing mechanism for the underwriters. I would say if you have questions, always reach out to your broker there as well. Have them walk through each of those pages with you. Does this sound like this applies to us? If it doesn't, it's not necessary. If it does, give them as much detail as you can because it'll save time on the back end. You won't get a ton of questions after the fact. It'll just move things along much more quickly. But any details you can give, if you have a website, share that. The underwriters like to look and see what you're doing, see what kind of events you have coming up. Got a 5K? They need to know that that's the type of special events that you're handling. Or if it's something they can't do, they need to let you know that earlier on in the process as well. So I would say always reach out to your broker. And if it really doesn't apply, just skip it and
just move on.
Yeah, move on to the next piece.
For the startup nonprofit, I don't have financials. I only have what I think I'm going to do this year. I don't have an audit. Right. I haven't gotten an independent CPA audit, not always necessary to general liability, but I don't have my IRS exempt status. That could take years. Does that matter for getting my insurance quote? It can. Some insurance companies will not quote startup nonprofits. There's actually a lot. And the reason for that is because there is no tangible financials to tie to coverage. They need that. It's part of their underwriting process. And also there's no loss history. So a lot of times when you're working with a broker, you may get a phone call, hey, I need copies of your loss runs. And what that is just a report from your current or prior insurance companies that spells out any claims you had and how much it cost them.
If you're a startup nonprofit and you've just filed for that IRS status, you don't have any of that. You don't have any prior loss history because you've never had insurance coverage before. Nonprofits Insurance Alliance, because we are a nonprofit and we are there to help any and all, we will write insurance for a startup. So all we need is a copy of that letter that the nonprofit has sent to the IRS for approval, and we can move forward on that premise. And we make a lot of assumptions. We know how new startup nonprofits operate. We know the operating budget or about what it will be. And we just are looking to get them some coverage so that they can start doing what they need to do in the community. So we're a little different in that respect. We do a lot of startup nonprofits because they don't really have a lot of places to turn. But if you are out there working with other carriers, that may be a hindrance. They may say, come back in 2 or 3 years when you've got some audited financials and loss history, and we can certainly take another look. That can be a challenge.
So another reason to think in the long run also as you're building your insurance package, the policy you start with may not be the one you're with 5 years from now or the underwriter, because as you build a record and build a history, you may end up having more potential insurers for future years coverage.
Yes. The more tenure you have with your current carrier and can share with the insurance marketplace, yes, as time progresses, it allows for more opportunity to market your insurance program, see what kind of alternative quotes you can get. There's a lot of nonprofit insurance companies out there, and it's just finding one that's the right fit that understands what the nonprofit is doing and what they plan to do. And if you're comfortable with the services and the coverage, absolutely. You can certainly entertain alternative quotes. It's not something that necessarily most nonprofits do every year, but if you've been with the same carrier for several years and you keep seeing little increases here and there and you start to question, okay, is there a better option out there for us? This is becoming a hindrance to our budget. I would certainly suggest talking with your broker and asking, do you have any other market options for me? Can you get me alternative quotes? If your broker says no, it may be an opportunity to talk to other brokers as well, because hopefully there's another option or two out there just to make sure you're in the best place. If you don't move, that's okay. But you want to make sure that you're in the best place and that you're making it work for your organization.
But it sounds like realistically, the longer your tenure, the more options you'll have. And as a startup, you may not have a whole lot of options.
No, unfortunately, a lot of the insurance marketplace is based upon that loss history. That's really the piece that they want to see. So it is very limited for a startup, unfortunately. If anyone's interested in learning more about us, you're welcome to reach out to me. You can find my contact information on the website. And we also have a member services organization within our group that will answer any questions or get you to the right place. Yeah, we welcome questions. Even on our public site, there's a big button that says get a quote. So if you click that button, I can't promise you a quote that minute. But what I can tell you is that we have a fantastic staff that answers every one of those inquiries and will reach out to you and we'll ask you, hey, do you have a broker? Do you need a broker? What do you do? Can we help you? We're going to tell you if we can help you. And if not, we're going to find you the right resources that will. So I encourage everyone to check out our website. We've got a lot of information out there to share.
Well, I love it. I love your website. There is so much there. I could spend days on it. I don't usually have the time for that, but there is a lot of information there. Well, Melissa, I can't thank you enough for being here today. This has been fascinating to me. I learned something. I'm sure our listeners did as well. And thanks for joining me.
Thank you for having me.
Thanks for joining us for this episode. Be sure to subscribe and stay tuned for part 2 of my conversation with Melissa Dalske, where we dive deeper into special event coverage, claims best practices, and some other important insurance policy topics. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Varela, Braun & Martel. If you have suggestions for topics you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.